Dude. Folks, we are live. Welcome to Sunday Night Futures Live. I'm making my tea. Bear with me one second. I'm trying to let the market settle down, so I'm going to bore you with a little bit of personal information that you really don't care about, but I'll do it nonetheless. I'm making my tea. No coffee. I was going to have coffee. Not good for me this time of night. This is day 15 of Sober October, halfway through the month. Feeling pretty good. And drinking my blueberry chamomile tea. Helps you sleep. All right. So I hope everybody had an awesome weekend. We are back. We live to trade another week. Thank God. We have the Russell 2000 up for some reason up front, and we are moving up higher by about 0.15%. Let's let things settle down for a moment, see what happens here. Let's say hello to people. Seymour Rivers. I saw you, Seymour Rivers, and I automatically just checked my audio. I'm looking forward to that. Me too. Thanks, pal. I love your enthusiasm. Sean, hey, brother, how you doing? Mr. Franklin, are you back this week or are you still out of pocket? Baba Crew, good evening. Hope it was well. And I am ready for some great insight into the market. Cool. Seymour Rivers, the audio is good. Awesome. Thank you, sir. Hello, Bob. No, truth is that this conference gets heats off Biden. Yeah. Mr. Pete, welcome. Larry's, sadly, we say goodbye to the Ephra. She died? Oh, no, don't tell me that. I met her. I didn't meet her. Sorry. Did she really pass away? That's sad. I was in 1987, 1988. I was in LA with a buddy of mine, and we went to it was Joan Rivers' show. She was filling in for Johnny Carson. She took a spot over at, I think it was CBS, and she had her own show to compete with Johnny Carson. And she got fired that day or the day before. Suzanne Summers filled in for her that night, and I had no idea. And I'll tell you one thing right now. There are some women that are pretty, and there are some women that are beautiful. Up front, you look at them, you see them, you're right there with them. They can look different on TV. This woman was beautiful. She was wearing a leather outfit with like this little mini skirt on it, and she looked awesome, just beautiful. You're in Montana. Okay, cool. Ironic and said she died battling. Well, God bless her. Yeah, I wish. Yeah, she was. Yeah, she was. Yeah, she was really good. And she was a smart woman. She had a couple of good businesses going on. Dan, welcome. All right, all. Let's get to it. All right, things have settled down here. We're now into the second 5-minute bar. These are 5-minute charts. And we had a storm at the opening gate here. And what we want to keep in mind going into this new trading week is that Friday was not a good day technically, in particular for the triple Qs. Very, very poor day. Now, we have a lot of earnings coming up this week, and we're going to go over those names in a moment. But I'm worried about follow through to the downside for this market. And we're going to take a look at some issues that are out there, some not issues, some clues. We're going to take a look at copper. We're going to take a look at oil. We're going to take a look at the US dollar. We're going to take a look at the euro in particular. You're going to know why in a moment. But the level of unrest in the world right now is like at nightmarish proportions. So we're gonna keep our pulse on that, and we touched upon it on Thursday night, and we're gonna keep our pulse on it because it can drive the market. So we have the Russell 2000 that's opened up. We're up just over a tenth of a percent, and we're holding it. Let's check out the ES futures, the S&P futures. And they are up about the same as the RUT, up slightly. We're seeing some fairly good uh, strength here as measured by the stochastics and by the squeeze indicator. And it looks as though we're going to keep some pressure onto the upside here, probably for the remainder of the program, because you have a positive stoke, you have a squeeze firing off. Let's check out the NQ. This is the NASDAQ 100. Very similar price action here. We're on percentage-wise, we're up measurably higher on the NQ than we are in the ES and the RUT. So momentum is good. I think I had the Dow up here as well. I want to check out the Dow. The Dow is up about the same as the S&Ps. And we're seeing some pretty good momentum here at the open. Quiet. Too quiet. Let's see what's going on with the dollar. Gap down in the dollar. Yields. Yields are moving up here. Wow, this is a big move on the 10-year yield. It should not be ignored. Let's take a look at we were down last week on the 10-year. So let's clear this all off. So what we're going to be looking out for here, technically the yield is broken support. Let's see whether or not this holds up. I always do that. God damn, it drives me crazy. At or below. There we go. And we want to know if we start putting in higher highs here as well, because that's going to add pressure. Right now, the markets are going to say, all right, it's gapping up. They'll just question whether or not it stays up. But if we start breaking out to new higher highs, then they start taking it a lot more seriously. But this does look like it has legs. Let's take a look at, we did the dollar. Let's take a look at the euro. Euro is gapping up. And this is interesting because I have some headlines to go over in a moment. And it doesn't bode well for the euro. So the euro is looking strong here. That leads me to believe that gold is probably, unless it's going to consolidate some of those gains, is probably going to pull back, a rally here, rally. Yeah, it's pulling back to consolidate some gains. I mean, we were up big on Friday. This was one powerful move. So we're pulling back in here a bit. Let's check out silver. Silver also doing an outside reversal bar, a 30-minute time frame outside reversal bar. We still have 17 minutes to go in that time frame, but this is a very bearish reversal bar. So we're going to probably come back and test a couple of these Fibonacci retracement lines I have here. So silver under some pressure. Let's go to oil prices. Oil did a reversal last week. Down on the session, off the lows of the session. Let's go to that 5-minute chart to get a closer view. This is not looking strong. Okay. I just canceled it, you freaking idiot. Nat gas. Wow. Big gap down on Nat gas. I happen to like Nat gas as a long, and I was hoping that they would do this. I didn't think they would. I mentioned yesterday on Market Wrap that I was bullish on Nat gas. I'm really liking this pullback, and let's talk about the whys behind Nat gas. Weekly view. So we got a little bit extended back here the week of the 2nd. Failure to follow through last week. This week, we're pulling back. We could pull back further here. We're kind of extended relative to this, the Keltner channel in white. Daily view. So I think we're going to flag out here for another day or so. And then we're going to look to build a long position on Nat gas. I'm liking Nat gas quite a bit here. Now, what'll that trade look like? It could be. I doubt I would buy Boyle, which is what we usually trade. Eats up too much buying power. It's a leveraged ETF. I would look to sell puts and then sell calls on strength, or buy a call spread. And by selling the options, I actually get the call spread almost for free. All that time decay, all that gets picked up by the premiums paid by the call spread. So that's probably what I'm going to do. I always like these trades to try and pay for themselves when I put on a call spread. I hate paying for time decay. Usually I get paid time decay. That's our primary business. So that's probably what we're going to do here. Well, we need the proper setup, and this is looking really, really good. So members will send out an alert when we're ready. Let's continue on with gasoline prices. They did a reversal bar last week. Let's go to the weekly view here. Bullish key reversal bar. Now, folks, I've used terminology, bearish engulfing, bullish key reversal bar already. If you're not familiar with that terminology, link below, 5-part video tutorial, my top 5 favorite candlestick patterns, free. That's it, $0. So, gasoline prices. I don't like that we did a reversal bar last week. I think that we may be pressing up higher, and that's going to be a problem on the inflation front. Now, if we break down, great. I'm an American. I want cheaper prices. I don't care what the Federal Reserve wants. I don't want 2% inflation. I don't want inflation. Now, the reason why I'm setting off this alert for a higher high is that if this fires off, that tells me that the markets are going to be watching. They're going to be concerned about more inflation hitting the markets. So gasoline could become a problem here if we get follow through. If we just stay here or pull back further, then it's not a problem. Let's go to agriculture. Corn futures, 3 consecutive up weeks. Looks like we're starting to gain momentum. Actually, this is our 4th week, right? Is this last week? Yeah, this is last week. So it's actually 4 consecutive weeks. Soybeans also caught a bid and broke out last week on soybeans. So it looks as though we're beginning to consolidate and bottom out on corn, on soybeans. Let's check out wheat. Wheat caught a bid last week. These are all beaten up pretty much. So it looks as though we're probably going to get a rally here on agriculture in the coming few weeks. The problem is that is inflationary. It's been a give back to the consumer of late. Prices have come down somewhat in the food area, but now we're threatening a breakout. The one area I was happy to see last week, which finally, this is live cattle. It was up on the week, but I believe on the day, on Friday, it finally gave us a down day. Yeah, finally got a reversal day. This is still a pretty powerful chart. Very powerful, strong chart. Let's leave it off. I want to go to copper for a moment because we're going to talk a little bit about copper in a moment. And we're going to talk about Dr. Copper, what that means, and how we're looking on a macro basis. This is a weekly view. It's a pseudo macro basis, but we want to take a look at the monthly chart. And you can see that copper is breaking down, has broken down, not is breaking down, has broken down. And this is probably going to go lower. And that's a problem. This is an indicator, as I mentioned earlier, for global growth. And if you see copper going in the wrong direction, meaning down, that does not bode well for economics globally. So copper is a problem. Let's take a quick peek at VIX. VIX had a very good day on Friday. On the week, this is this week, we're obviously down at current. But what we're going to be looking for is a new weekly higher high. And I'm telling you right now, this is a bullish chart. Not so much this week, which is this red candlestick, but what I'm looking at here is volume. Look at the volume here. All green candlesticks. Also, stochastic. And this is not your regular stochastic. This is a script I had written, and this is moving up higher, positive territory, also being validated by now a squeeze firing off. The VIX, I think, is moving up higher. So that does not bode well for equities. Let's go to comments. Wow, you guys are busy tonight, man. I have my moments. Um, hey, TZ Burton, welcome, brother. Why aren't these comments coming up? There we go. Bob, do you think home interest rates are going higher? Probably, yeah, probably. Is gold coming back to 1885? I think it got ahead of itself. It really all matters. It all has to do with the Middle East and the unrest that you're seeing over in Europe right now. If that continues and the saber rattling continues, then it may take a while for gold to get back to 1885. Uh, where is it now? Right. Let me just check back in. It's going to be hard pressed to get down there. I think that 1900 mark they're going to put up a battle at, given with all the concerns that are out there. I think that the best that we're probably going to be able to hope for is a retrace back down to 1900, maybe an overshoot down to 1885. You never know, right? But it's only $15. So actually, no, it's more than 15 bucks. Sorry. I'm thinking 1985. So probably not. Probably not. So gold is looking pretty good here, but I do think we're going to get a retrace. What is good debt to equity ratio? It depends upon the business. I mean, you could have REITs that have crazy debt to equity ratios. So, it depends upon the industry, depends upon the company. So I'm no great expert on that. I don't want to pretend I am, but I do look at debt relative to cash on the balance sheet. So that's one thing I definitely do look at. So it's a good question. Okay, let's get to it. Okay, coming up this week, we have the Empire State Manufacturing Survey coming out tomorrow. Another Fed head as well. They've been doing a lot of jawboning lately. Retail sales on Tuesday, very very important number. I have some stats to go over in a moment that's going to show that may be a disappointing number. And if it's not disappointing now, the reason why it may be disappointing moving forward. Industrial production, important number that's been declining. Business or inventories, we'll see whether or not they build. If they build, that means that retailers aren't pushing goods. That means they may need to do cost cuts in front of Christmas. That is no bueno. Wednesday, housing starts, building permits. That's a forward-looking indicator. More Fed heads. Watch 2 p.m. on Wednesday, the Fed's beige book. Thursday, we get, as we do each week, initial jobless claims. Then we get the Philly Fed coming out, U.S. leading economic indicators. And then right after that, we get Jay Powell out. That ought to be fun. Austin Goolsbee, that's one of the Obama thugs, now a Federal Reserve governor. More Fed. We got a bunch of Fed heads coming out on Thursday, another one on Friday. So Lord knows what they have to say. That's interesting, but they do get listened to. So on the earnings front, it's going to be a big week. This is really the opening salvo. You want to argue that Friday was okay, but really, is it not really? On this week is going to be big. Uh, Schwab, I would not normally mention. The reason why I'm mentioning it is What the heck is one of my old videos is playing. It's Thursday Night Stock Charts Live. I don't know if you folks can hear that. Where is that? Uh, where is that? Here it is. It's playing on Twitter. That was weird. Okay, sorry about that. Um, so Charles Schwab concerns about a potential exposure to the regional bank crisis. So they have problems. Tomorrow's going to be a very, very important day for Charles Schwab. Normally, I wouldn't even talk about their earnings, but tomorrow, important. B of A, uh, they may be moving to oust their CEO. They have problems there with with their bond portfolio. So another bank, and this is a pimp Mac Daddy too big to fail bank that's in trouble again. We get Goldman Sachs coming out. I thought they reported on Friday. They didn't. They're reporting on Tuesday. BNY Mellon. So more big banks coming out this week. Lockheed Martin. We traded that as a short last week. We did well with it. They spiked it up on the Arab-Israeli deal. It pulled back. We made some money there. We had the airlines coming out. Then on Wednesday, that is when things get real, real. Morgan Stanley in the morning. Then after the close, Netflix, Tesla. It's going to be big. Thursday, Taiwan Semi in the morning. Blackstone Group, not BlackRock, Blackstone. Union Pacific, the transports got hammered late last week. FedEx destroyed. So watch out for the transports. That's an indicator of forward-looking growth. CSX comes out. That's another railroad. Friday, Amex, and that's about it. Those are the names to really watch moving forward. Now, going into the new trading week, as we always like to do, we like to get a feel for the valuation of the market. And it seems like this is like a stuck needle. No matter how much we move on this market, one direction or the other, we are just at a 30 PE ratio on the Schiller PE ratio. Now, when you take this is a rear view mirror. This is a trailing PE ratio. Now, what the street likes to do is they like to do this. They like to talk about forward PEs. The forward 12-month PE ratio for the SPX is 18.1 on a trailing 28.58. But let's play their game. 18.1 is the 5-year average. 18.7 is a 10-year average. I'm sorry. The 10-year average is 17.5. The 5 years 18.7. We're at 18.1. So on a 10-year basis, we're expensive. On a 5-year basis, we're relatively inexpensive. Now, according to Wall Street, the earnings recession is over. Remember, this is an important earnings season due to the fact that the past 3 earnings seasons, we've gone in with lower guidance. So it was easy to beat. They reduced expectations and then they beat. And that allowed the equity markets to rally. Now, going into this earnings season, they didn't do that. They kind of guided higher moving into this quarter. And now they need to deliver. So don't listen to the earnings per share. Look at their sales. What were their sales? I don't care what the EPS was. They can manipulate EPS. I care about sales, revenues. That's what really matters. So why is this so small? S&P quarterly profit growth year over year in blue. S&P quarterly earnings growth estimates, you can see how they're rising into now through 2024. So buckle up if these companies disappoint. Now, we were talking earlier about Dr. Copper. Understanding Dr. Copper, this copper prices are a good leading indicator of an economic cycle. For example, if orders for copper are being canceled or delayed, the price will drop. Now, what does copper go into? Goes into wiring. You're building a house, you need wiring. You're building commercial real estate, you need wiring. You're blowing out your infrastructure, you need copper. And this can lead to this could be a leading indicator that an economic recession is at hand if it declines. Conversely, if orders for copper are rising, the price will go up. So as we move into this earnings season, we don't want to rely upon earnings reports for how the global economy is doing. No, 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 because our well-dressed, slick-back-haired thugs on Wall Street, they'll be on CNBC jawboning the market up higher. So what we want to do is we want to say, hey, let's be curious. Let's do our homework and take a look at copper and say, okay, is it going up or is it going down? You decide. Copper is in a bear market. And this is a monthly chart. And we are now breaking monthly support levels. We have half the month left to go here. Maybe we'll rally back. But as it stands right now, this snapshot in time, we have a bearish divergence on RSI, bearish divergence on stochastics. These are momentum indicators. They are forward looking. So what they're telling you is that we are weak and getting weaker. Now, in times past, you would have seen some reaction by the S&P 500, which I have overlaid here in orange, but no. S&P 500 completely blowing this off. No reaction whatsoever. I mean, look back here. Copper dropped like a rock. S&P 500 dropped like a rock. Back here, you had a bit of a reaction. Copper recovered. S&P 500 recovered. So it's not 100% correlation tick for tick. But when you get a big sell-off like this, you would imagine that you would get some sort of response out of the S&P 500. You're not really getting it. Now, as we look at the consumer, this is fresh data. The consumer is going to feel this. Personal interest payments have surpassed $500 billion. This level has never been seen since 1959. I doubt that is adjusted for inflation, so let's put that out there. We don't want to be hyperbolic. But in fact, I know it's not adjusted for inflation. So this is the weight that the consumer is carrying on their back as we move forward. Remember, this week we have retail sales that are coming up. Very important. Retailers will be reporting in a couple of weeks. So it's going to be very interesting to see how those companies do. And in terms of where I kind of missed a chart here. Where is it? All right, we'll get to it. I'm sure it's down here eventually. I'll segue back into it. So consumer under a lot of stress. That's like 2/3 of the economy. I went over this on Thursday night, and we spent a lot of time on it. And we're not going to go down the road of I'm with Palestine, I'm with Israel. We're not here for that. We're here for the big picture. That is a puppet show. Forget about the human suffering. I'm talking about the theatrics of the media, of the people on Twitter, of the bots on Twitter, of the politicians. They don't give a rat's you know what about the people that got killed that are suffering on either side. They don't care. It's crocodile tears. So the reality is that as we go into the new trading week, nothing has changed. Israel, Palestine, whatever you want to call this new thing, is the new thing. And they want you to be angry. They want you to be focused on it. And I forgot who said it earlier. I think it was Trader Isaac, if memory serves. It takes the spotlight off of domestic problems. That's what they want. Biden cannot have the focus on the domestic economy. He cannot have it on his administration. because that slows down his agenda and risks the power. So they want this to remain first and foremost in your mind. In the grand scheme of things, it doesn't matter. They've been doing this for decades, millennia. So this illustration is to be a precursor with regard to the psyops that we're experiencing right now. And when you're looking at these Twitter posts, you're looking at the media, think about it. Am I being psyoped right now? So these countries, Israel, America, Eurozone, and Canada, are fighting Gaza. Now, I think that's overly simplistic. But the reality is right now that is the case. And the only way that this gets to be more accurate in its nature is if this gets fulfilled. And that is fears of a wider war in the Middle East as Iran prepares to intervene if Gaza is invaded. I don't think they're going to do it. I don't think that they have the ability to do so. Maybe drone swarms if they can get that far, missiles if they can get that far. But the Israelis can strike them as well. I don't see ground troops unless, of course, they come through Syria. So that would be a major problem. Now, what are we doing? Because we are prepping for it. And this is what I wanted to get to earlier. This was completely out of order. Got to fire my producer. Going back to this for a moment, interest payments on personal debt. Look at the bankruptcies. Look at consumer discretionaries. By far, along with healthcare, which is a shocker, and industrials, by far, these three are leading the bankruptcy filings for 2023. When I look at this one in particular, industrials and healthcare, those are jobs, high-paying jobs. Discretionary, not so much, but they're jobs, right? People carry, one or two retail jobs to make ends meet. So we don't want to knock that. So a lot of bankruptcies here, a lot of pressure on the consumer. It is now making its way through the bankruptcy courts. Now, we have a second air carrier group en route to deter hostile actions against Israel. Now, in the end, let's face it, Israel was created in 1947. There have been multiple wars between Israel's neighbors and Israel. There have been multiple terrorist wars with Hamas, Hezbollah, border wars with Syria. Nobody's ever really, out of the Arab world, really taken an interest in helping the Palestinians, with the exception of sending weapons and rhetoric. It's as simple as that. They don't really care. So I don't think using history as a guide, unless we provoke something, meaning the United States needing the new war, I don't think that this amounts to much. But that's not to dismiss it. I don't dismiss this administration and their need for foreign attention, meaning a war of some sort in the name of human rights. They're going to protect the Israelis or the Palestinians, whatever side we're going to end up on. I don't think we have any side, to be honest with you. I don't think the Biden administration and the Obama administration personally like the Israelis. They sympathize with the Palestinians. So I don't know what side they're going to take, to be honest with you. I think money-wise, they need to side with the Israelis because they have the PAC money. So they'll follow the money, ultimately, I guess. But when it comes down to instability in Europe, I mean, this is a major, major problem. The stoking of instability. You take a look at these videos of the number of protesters this is London. And I'm not going to play this, but it's just really stunning, the number of the Muslim population And to anybody that was surprised by this, you got to be out of your mind. You knew this was coming for generations, for God's sakes, especially in recent decades. In France, they had to deploy 7,000 soldiers after a teacher was murdered. And this is what I want to talk about. One of my top 5 picks for this trading week is Marriott, short, because they had to evacuate the Louvre, Versailles, and any number of other places. Now, I'm a big fan of Paris, man, but I wouldn't be booking a vacation there right now. So this is going to hurt the tourism industry quite a bit, which is why we want to short Marriott. And members, check the forum. I put in the extended, detailed version of how we want to short that this coming week. All right, let's talk about the events that are unfolding, what they're doing to the currency markets. Last week, we saw a bullish key reversal bar on the U.S. dollar. This does not help. Seeing France, Germany, these big protests, they're going to be hard to put down. Very, very hard. So the dollar caught a bid last week. It's going to be interesting to see whether or not we get follow through. Right now, we're down with the euro rallying. Could be just a relief rally. Now, oddly enough, or not so oddly enough, gold rallied as well last week, along with the U.S. dollar and along with the gold mining sector. That doesn't happen normally. That isn't a result of geopolitical risk. This will not last. So if you're looking to put on a gold trade or a gold mining trade, I would caution, be very, very careful here, because they've come a long way in a very short period of time. And if the dollar remains strong, and I'm not saying that it is, but the weekly chart looks pretty good, but it also looks good for gold and the gold miners. But with regard to the dollar, unlike gold and the gold miners, this is an ongoing bull rally here. These are just really coming out of big sell-offs, and they haven't technically broken out yet. So momentum is clearly behind the U.S. dollar, not so much yet gold and the gold mining stocks. That does not mean that they will not ultimately beat out the dollar even this week, for all I know. I'm not that smart. But just be careful. If the fears over in the Middle East subside, yet the dollar remains strong, gold and the miners are going to pull back along with silver. So be very, very careful with buying right here, right now. Take a pause. Wait, let's see what happens. And we'll take our cues from the market. If the dollar reverses, fear comes off, we'll see whether or not they sell off gold as well, because fears come off. If the gold rally holds and the dollar comes off, that's a different story. Then we want to get bullish, but not right now. We're going to wait and see. Okay, let's let the dust settle here, and then we'll take our cues from the market, take our cues from the currency markets as well, to decide, okay, it's good to get more bullish on these names or bearish, one of the two. What time do we have? We'll go to comments first. We got 15 minutes left. I think we timed this pretty well. Go to the members area, see what watch stocks we have. If you guys have any watch stocks, let me know. Thomas, I missed your request, I think, on SEDG, or did I not? Maybe I did do that one. Let's go to comments, SEDG. Let's go to comments. Copper is also used for plumbing. Yes. Thank you for that. Bob, would you buy puts on BHP? No, I would not, Sean. No, I like the price action last week, actually, on BHP. We'll go over that one, okay? You were very smooth. Thank you, TZ Burton. Thank you very much. Appreciate that. Okay, let's get to it. We have, if anybody has any watch stocks you want me to go over, let me know. We have some time here, and we will take a look. The first chart that we're going to look at, folks, by the way, this is going to be brought to you by our friends over at TrendSpider, automated technical analysis. and I used their scanner today to scan for the stocks that I picked for the new trading week. All right, so BHP. Yeah, I this is actually, sorry, this is a 15-minute chart. Let's go to a weekly chart. So no, I would not go buying puts here. And the reason is this, is that it was only a few weeks ago that BHP had broken out on a weekly time frame, and I bought in advance of that breakout. We since sold that position. I think we did. Yeah, it was a small position, and it weakened up. It broke down. So you know what? I'm going to jettison this. We'll look back because the dollar was strong, and that's not good for BHP. BHP is a big raw commodities producer. So with the dollar strong, it just wasn't making sense to hold on to it. So last week it caught a bid because precious metals caught a bid, and I believe that they produce copper as well. Correct me if I'm wrong on that, Sean. You'll probably know more than me on that. But looking at the chart itself, I would not go short here because all it's doing is creating a new triangle formation, and up volume was very strong last week. Now, a lot of that was selling. We were higher early on in the week, and we backed off to close well off the highs of the session. But that in and of itself is not a short indicator. You know, you want to, I could play the other side and say, okay, we were lower on the week and we closed higher, right? So we want to be open-minded and have no biases whatsoever. Now, taking a look at the daily chart, they're trying to break this out. It's being rejected, but that doesn't mean that another run, even after a minor pullback, is not going to succeed with a breakout, especially if the dollar breaks down. Right now, it doesn't look that way. But last week was a geopolitical week. It drove Forex, it drove commodities. We'll see whether or not, if we get that risk, a geopolitical risk coming off the table, whether or not that's going to change our tune. What would change our tune here about getting short or getting long of BHP? It's simple. It's playing the waiting game. And that is, do we break out of this weekly triangle formation or do we break down? If we break down, it's a short. We break out, it's a long. Simple as that. And in fact, I'm curious because I happen to like this company. We don't want any sensitivity. We want to see it close and we're going to keep this active for a while. That alert is set. Now, to the short side, we want to do the same thing. Now, between now and then, I'm not sure. We'll take a look now. I'm not sure what the IV ranking is here, but given that we're in a consolidation range, this may be one. It's not horrible, not great. This is one where you could sell premium on, just sell a strangle, and just generate some cash flow while it's sitting in a trading range doing nothing. Anybody that's buying the options on BHP right now, it's pure gambling. So if you're selling premium here, you're taking suckers' money right now. So IV ranking could be better. It's not horrible. So that's an option should you choose to take that route, like we like to do, is generate cash flow. So that's Tesla. Sorry, that was Tesla. I had to change the symbol. That would help. That was the IV ranking here is 39%. That's really attractive. I would just watch out for earnings. I would not do this trade in advance of earnings. But the IV ranking is very attractive here on BHP to sell premium while it's in this trading range. That's what I figured, Sean. Right, right. Copper another. So if you see that break in copper prices and you get the break on BHP, that's a signal. It all depends upon how the hedging book is. If they're well hedged, it won't hurt them all that much. So you can't look at it that pure prism and say, okay, copper price is down, BHP goes down. Maybe they're well hedged, but if they're not, then they could be in a lot of trouble. So uh, I'm sure that there's some sort of correlation there. If copper breaks, which looks like it's going to, that could mean bad things for BHP. Uh, hey, Dane. Hey, Dane, it's been a while. Hi, Bob. Your thoughts on CrowdStrike? It has been an incredible run. Yeah, it's very, very extended. I've looked at that chart. It's an IBD darling, Investors Business Daily darling. And when they sell off, they sell off really, really hard. So I love the company. It is very extended. We'll take a look at that now. BA, always a crowd favorite. Falcon. Bob, do you know the fundamentals of what is called weak structured short? No, I don't. I don't. And when it comes down to fundamental analysis, I really outsource that to Investors Business Daily, and I defer to their statistics and ranking system. It keeps it very simple for me. That way, I focus on the technicals. Okay, SEDG, Solar Edge. I like this. I haven't liked this. I like it now. We're in the bottom of a descending wedge formation. Horrible fundamentals. EPS growth is amazing. Good ROE. Just that they're out of favor. I shouldn't say fundamentals. I apologize. Good fundamentals. Technicals are horrible. I correct myself. I'm liking this. They're reporting on the 6th. I think this is breaking out. Yeah, they've already priced in earnings here on SEDG. I'd be a seller of puts here. They pay a nice dividend. Oh, it's BHP. Man, that's my new indicator that's firing off. All right, so here's SEDG. Here's your descending wedge formation. I think we're moving up higher here, a lot higher. See, the reason why these symbols aren't carrying over, I need to do this. I need to link them. So IV ranking, very, very good. You can get some really nice premium here. The report soon. Trading at about 120. Jesus, these are nice premiums. You're looking at an 11 delta. you can get in a buck 40, a buck 45 on a put. If you want to be even more conservative, you're looking at 85 cents to 90 cents on a put if you want to sell it. I mean, that's nice coin. High probability of profit, and you're generating some nice cash flow. So SEDG is looking really good going into the new trading week. I just wouldn't buy the options here. I'd rather buy the common and sell covered calls because the options are way too expensive. Next chart up is CrowdStrike. What can you say? It's a beautiful chart. When I look at these charts, I take my crayon out. I draw the uptrend channel. This has more room to go. Now you can see we have a volume shelf immediately above here at 192.13. And you're seeing some jitters on the part of bulls and some selling on the part of bears up at these levels. So 192.13 is probably going to be a bit of an obstacle to get through, but we could rally through it all the way up to 200 bucks a share, and that would be the upper band of the rising uptrend channel. So I'm still bullish on CrowdStrike. Let's go to a daily chart. The trend is still up. A couple of back-to-back down days, but strong stocks tend to get stronger. Weak stocks tend to get weaker. It looks like we're consolidating until such time as we break down. Otherwise, we're probably going to break out. Boeing. Wow, they broke through that 190 level. That was critical support on Boeing. A huge reversal bar last week. So what they just told you, the market just gave you a clue. What they're saying is that right here, there are a ton of sellers looking to get made whole. And it makes sense because if you extrapolate this line out, going back over here, you could see all the support that was here. Those buyers from back here are not selling. They want out. Look at the volume. This is going lower. Monthly view. You do have monthly support below. This is the automated trend line. Short volume is declining some. Daily view. I think we're going lower. Short volume on a daily time frame is rising. So this is in play. The shorts are on this. Wait for a critical support level. Technically, we bounced off of a monthly support level. And I think that's it. Too soon to jump on REITs. We're following. Let's bring it up. Whenever I feel my knee-jerk reactions to say no because I have a bias, I try to stop and say, okay, let's take a look, because that bias is probably had by a lot because of rising interest rates, and it's probably the wrong bias to have. And now that I'm taking a look at this, it probably is the wrong bias to have. So another example of a descending wedge formation. Now, we did put in a new monthly lower low. We have rallied, but we still have another, 15 days to go in the month. So a lot can happen here. So am I a buyer? No, not yet. we need to break out of this downtrend channel. Right now, the trend is still clear and defined. They could pop this up another month, but what they could ultimately end up doing is one of these numbers, rally it and give you a bear flag setup, which does not end well. So I would not be a buyer here. Weekly view. Yeah, they popped it up a couple of weeks and they could easily break this down. Now, if they break it out, pull back, do a higher low, and then rally through that prior high, different story, different game. Looking at the REIT through different, using completely different lens at that point in time. Right now, though, in this snapshot in time, we're looking at a dead cat bounce in a rising interest rate environment and the path of least resistance until such time as it stops going down is to the downside. So I wanted to be more bullish here, but I can't. Daily view. On a daily time frame, it's looking good for a short-term swing trade, but you're really not buying REITs for a short-term swing trade. You're buying for a divvy, and it looks as though it wants to break out. RSI gaining strength with higher lows and higher highs. Short interest dropping off. So short-term, it's gaining strength. Longer term, you still have that threat of this is just simply a dead cat bounce, and then we resume the downtrend on a spike higher on yields. So that's my take. Hey guys, thanks for being here. Everybody have a profitable trading week. Smash like, subscribe, leave a comment if you're watching this on the replay. And don't forget, check out my video that I sent out this morning, my top 5 picks for the new trading week. You'll probably see it on offered to you after this when I log off. So check it out. And members, I did the detailed video, entry points, stop points, and price targets. That's posted in the members area. Go check it out. And I will talk to you soon. Again, have a profitable trading week. Enjoy the remainder of your weekend. Be well.